The group is a global integrated oil and gas service solutions provider with 4 business segments. In 2012, the focus of the group was shipbuilding, but the profit profile changed in 2016 or 2017. Rather, the group became a provider and operator of production platforms. Revenue had a continuous uptrend since 2019. Profit after tax was more volatile, with spike in 2023 due to one-off gain and losses in 2020 and 2024 due to bad debt. Even ignoring this, there was a profit uptrend, but there was no clear signs of improving capital efficiencies. Except for the improving return on assets, the performance of the other metrics got worse. This was reinforced by the narrowing gap between the gross profit margin and SG&A margin. When it came to capital efficiencies, the performance of the 3 metrics declined. The return picture was mixed. There were declines in both the return on investable capital and cash flow return on investable capital, while return on equity showed an uptrend. The average returns were less than the respective cost of funds, meaning that Coastal did not create shareholders' value. There is also no discernible trend for the contribution margin. A key feature of Coastal is that its fixed cost is a large component of the total cost. In 2024, it accounted for 90% of the total cost. From a capital efficiency perspective, Coastal gross profitability and return on equity were worse than its peers, especially post-2018. But from a financial perspective, Coastal had a lower debt-equity ratio and a higher cash flow conversion ratio. I would rate Coastal as financially sound. While there were negative points, they were more than offset by the positive ones. Coastal had an asset value of $3.49 per share compared with its market price of $1.75 per share. The earnings value is significantly lower than the asset value. Given its history of asset write-downs and bad debts, I would prefer a margin of safety based on the earnings value rather than the asset value. Coastal's new business direction had enabled it to deliver improving profits and is also financially sound. Unfortunately, there are several operating concerns. If the group can turn around its performance, then it is an investment opportunity. But if you have a pessimistic view of management, you should look at other companies. The information presented here is for educational purposes only. For more details, read the blog article. Thank you.